Hello and welcome back to G2's weekly market update, where we unpack the week's top stories shaping global markets and what they mean for investors. Let's dive right in. United States. Fed signals more easing as markets rebound. US stocks ended the week higher, bouncing back from last Friday's sharp sell-off, the S&P 500's worst day since April. Early gains were supported by easing US-China trade tensions, dovish comments from Fed officials, and upbeat bank earnings. JP Morgan, Citigroup, and Wells Fargo all beat estimates, helping restore confidence at the start of earnings season. However, regional bank troubles later in the week sparked renewed credit concerns, pushing the VIX volatility index to its highest level since April. Fed Chair Jerome Powell reaffirmed expectations for further rate cuts, citing rising risks to employment. The Fed's Beige Book showed mixed economic conditions, steady jobs and wages, but softening consumer spending and more layoffs. Treasury yields fell sharply, with the 10-year yield hitting a 12-month low as investors sought safety amid the ongoing government shutdown and weaker data. Europe. Mixed week as growth stagnates and politics dominate. The stock 600 edged 0.37% higher, lifted by dovish Fed tone and fading trade tensions, though country performance diverged. France's CAC 40 jumped over 3%, while Germany's DAX and UK's FTSE 100 slipped. In the UK, GDP grew 0.1% in August, signaling a flat economy. Wage growth slowed and unemployment ticked up to 4.8%. Eurozone industrial production fell 1.2%, led by steep declines in Germany's auto and machinery output. In France, Prime Minister Sébastien Lecornu survived no confidence votes after suspending a controversial pension reform, temporarily easing political tensions. Japan. Markets dipped amid political uncertainty. Japanese stocks slipped with the Nikkei 225 down 1.05% as a strong yen and coalition uncertainty weighed on sentiment. The JPY strengthened to around 149 per dollar as investors sought safe havens. Political talks continued between the LDP and Japan Innovation Party to form a new coalition, a key step for Senai Takaichi's path to become prime minister. The 10-year JGB yield eased to 1.62%, reflecting safe haven demand and expectations that the Bank of Japan will hold rates steady later this month. China. Stocks fall as deflation pressures persist. Chinese equities declined with the CSI 300 down 2.2% and Hang Seng off nearly 4% as US trade tensions intensified. Inflation data highlighted ongoing weakness. Factory gate prices dropped 2.3% year on year, while consumer prices fell 0.3%. Core inflation, however, rose to a 19-month high, hinting at modest stabilization. Investors now await next week's fourth plenum, where policymakers are expected to outline China's next 5-year plan with a focus on boosting domestic demand amid global trade challenges. G2 takeaway. Global markets steadied this week but remain sensitive to macro and policy cues. The US rebound was powered by rate cut hopes and strong earnings, offset by credit risk jitters. Europe faces weak growth and political uncertainty. Japan's policy clarity and coalition outcomes will shape near term direction. China's deflation and trade pressures keep sentiment fragile. Investors should stay watchful as monetary easing hopes meet persistent global headwinds. That is your G2 weekly market update. Thanks for tuning in. Remember to like, share, and follow G2 Financetech for smart, sharp, and global market insights. Thank you.